Hassans, first of all, for hosting us here. It's a great setup. I would like to thank our sponsors because I tend to forget it usually. So our sponsors are, and partners, Gamma, BFA, Hyperion, and Our Town. We're going to start on time. I know we have many more people who are supposed to come, but the traffic and the queue is crazy today. So what is real, if you heard about it before, it's just an initiative to be able to gather all the actors of the real estate world in Gibraltar locally. We're going to start, starting very modestly, but with a prestigious company which is neutral enough in Gibraltar and has involvement in most of the developments, and they're going to give us their objective view on it. It will be followed by question and answers. We will not be able to answer all the questions, so we're not necessarily with the right desk, offices, and so on. So we're happy to debate as well. That's the principle. You're all here to be able to give your opinion. And we're going to create a form of a club soon, the Club Real. And if you don't mind, Amy and Mercedes will work amongst us to collect some business cards in order to be able to give you the next program and whatever we decide to propose you. That's it really, so let's try it directly, please.
Great. Thank you, Jan. So, September 2004, I arrive at the border and a very prestigious man, Momi Levy, was there waiting for me. And in true traditional Gibraltar style, I was welcomed, looked after and taken care of. On that very day, I had the honor of meeting some legends of the property market of Gibraltar. Brian Francis, Brian Hill, Avi Macias, James Levy, some real giants of Gibraltar's past. For the last 20 years, I've now been working here with many of you in the room. I don't know, show of hands that have worked with Rich and I over the last 20 years, maybe, so I can get to see a few of you. And all the ones that haven't for the next 20 years. So it's been a great journey over those 20 years in the Gibraltar market, specifically the development market. Ocean Village didn't exist then. This beautiful building we're in now, Midtown, didn't exist then. The World Trade Center, trade winds. Gibraltar as we know it today wasn't around then. It was a lot of plans, a lot of designs, a lot of presentations, a lot of drawings. And fast forward to where we are today in 2023, about to go into 2024, we have a huge development pipeline that hopefully we'll all be working on for the next 20 years. And I think to start today with that backdrop is important, because to achieve what you all in the room have achieved over the last 20 years is incredible. And you only do that through partnerships, relationships with agents, with lawyers, with brokers, with lenders, with architects, with banks, with surveyors and valuers and professionals like ourselves. As a collective, you and the Gibraltar market have made that happen. And for the next 20 years, we've got an incredible pipeline that we're going to be talking about today that hopefully, collectively, we'll all work on together and make happen. That's the vision, that's the dream, and that's the future of Gibraltar. And if it was done by the legends of the industry 20 years ago to be where we are today, hopefully everyone in the room will be working on the new projects for the next 20 years. So, I'm Rob Cohen, this is Rich Buckley, my colleague. We are MJ Group. For those of you that don't know us, we're an international valuation advisory consultancy business. We have our offices in Spain, Portugal, Italy, Gibraltar, and our head office in the UK. We have a huge team of valuers and advisors representing all of the major funds, institutions and banks across the world. Some of our services are here, lending, mortgages, funds, development, buy-to-let portfolio, industrial, commercial, residential, all the areas and facets of the property industry. Here are some of our clients, some of the biggest clients in the world, some of who we're lucky enough to have in the room today. Thank you. I'm going to give a bit of a backdrop for what's going on in the UK because it directly impacts and affects what's happening here in Gibraltar. And in a moment, I'm going to share with you a very exciting meeting I had the other week with the Bank of England monetary advisors, the people that advise on monetary policy and affect interest rates. So I'm going to talk about that in a minute because I think it's really interesting to understand what the Bank of England thought process is and how that will affect us in 2024. So just looking at some headline indicators that we've got here, and the key points, if you can't see, are really everything's focused on inflation and interest rates. That's the key thing that's been affecting our markets. And it affects every part of the property and development cycle, because when funding is on a 5.25 base rate, and when you're getting development finance, and in the UK, similar to Gibraltar, you're going to be at least 3 points above that for any development finance. To make a project viable, the cost of that finance is now more expensive than it has been for decades, for obvious reasons. So in the UK, development has definitely slowed down, and it's slowed down because values have come in and the market has softened, and developers generally say, okay, it's a softening market, prices have come in, the cost of borrowing is more expensive, so less people are buying, less people are active, less people can afford mortgages. Thus, the absolute moment for a property to come onto the market where you're going to get probably, hopefully, the best price and the best lending conditions clearly isn't 2023, and 2024 will be challenging for those reasons. I think anyone that's worked in development, on whether that's funding, building, the optimum moment to release or sell those units, whether commercial or residential, is in a strong lending market, a positive economical market where there's good activity, and clearly 2023 is not the strongest of markets. Now, the positive, inflation is now coming under control, and I think the message that the Bank of England monetary policy advisors gave me the other week was the following: they're really happy with the progress that has been made in 2023. And for their opinion, slowing down the economy, slowing down the property market, slowing down development was a key target for the Bank of England. That's what they wanted to achieve. In 2024, if the data continues exactly where they are today and everything goes in a line, they will achieve their goals and objectives by Q3, Q4. What does that mean? By Q3 or Q4, they've got inflation down to around 2%, and they believe that household incomes are under control and people understand what their spend is. And at that point, they believe that interest rates could start to come back, okay? So Q3, Q4, September, October 2024, the Bank of England advisors have said to me that if all the indicators carry on where they are today, that's what we should be looking for. So if we went back a year, and I was in Gib a year ago and it's December 2022, and inflation is rocketing, and interest rates are about to go to the highest point in decades, and someone was going to ask me what is going to happen in 2023, I would say it's going to be a really difficult year. We don't know where this is all ending. Economic uncertainty, political uncertainty, all of the key variables seem to be going in the wrong direction, and there's a big question mark and a dark cloud hanging over all of that. Move on 1 year, actually going into 2024, a lot of that uncertainty has been taken away because clearly inflation is coming down, clearly we hope that interest rates have topped out. Thus, the mindset and confidence and sentiment is everything in the economy. The mindset is going to be a more positive one in 2024 for sure, compared to what we went into this year. So that's a positive. With the Bank of England, we also discussed mortgage approvals, and you can clearly see the decline in 2023, and 2021 and 2022 were really strong years. We're at, again, 15, 20-year lows for mortgage approvals. The average pre-Liz Truss would have been at least 80,000 a month, and this has now come down by half. We're trading at 50% below on a transactional mortgage lending approval basis. And then the final data from the UK is the residential transactional volume. Again, it's coming in slowly but surely and nowhere near the historical highs of what we've seen over the last 20 years. So very UK-centric trends, but very important for you to understand where the Bank of England see things moving in 2024, what they think is happening to interest rates and inflation. And then the final point on that is that certain markets have performed both in GIB and the UK, and Rich is going to go on to GIB in a second. The prime prime market has performed exceedingly well. And what you don't see in a lot of the data is that 40% of all transactions in the UK in 2023 were cash, and 70% of all the transactions in prime, super prime were cash. So that means non-mortgage lending. So the data gets a bit hidden. You don't see those transactions so much, but 70% of all prime, super prime lends on residential property were cash purchases. Transactional volumes were good, and it was a performing year. So you even get nuances within markets where some markets perform and some markets don't. Now I'm going to pass you over to Rich to go through Gibraltar.
Hello. Yeah. Hi everyone. I'm Rich Buckley. I recognise a lot of faces in here, but those that don't know me, I'm a chartered surveyor. Been working in Gibraltar now for the last 13 years. Been in the property industry for over 20. Started my career in local government in the UK. I was there for 8 years. Moved over to Spain, to Madrid. Worked in the private sector with CBRE for over a year. Then moved to their offices in Marbella. Spent 3 years there, and then joined with Rob in 2011, something like that. So been in GIB since. I just want to briefly touch on a few economic factors in Gibraltar. I'm sure you're all aware of how Gibraltar operates at the moment, so I don't want to go into too much detail. Quickly run over it, and if you have any questions I'm going through, please feel free to join in. The intention of this session is to allow everybody to contribute, questions, answers, and obviously we want to get everybody involved moving forward. That's the aim of these sessions. So at the moment, GDP sits at 7.5%. Adjusted for inflation, it's around 1.2%. Inflation fell to 5.5%, and that's recorded in June 2023, lower than the UK. The UK is actually lower now, so the latest figures are, I think we looked at them at around 4.4 in the UK. So we expect the Gibraltar numbers to come down, but these are the latest ones we've got available. So yeah, that represents 2.3% over the quarter and 5.5% over the year. Cheers. Some key indicators are some issues that arose in 2023 that we've all had to deal with. The main issue is obviously the treaty. Hopefully now David Cameron's been elected as Foreign Secretary. Seemed quite keen to move things forward. The latest talk is that they're quite close to a deal. But I guess we've had that discussions for quite a while, but hopefully now we'll see a little bit of movement and we can get closer to that signing of that treaty. We've had the Gibraltar elections, GSLP got elected, stabilised things, I guess. With the Spanish elections, I think there was concern that might drag on, and we may see more elections moving forward, but there's coalitions that have been formed, so that's positive news, and hopefully allows discussions and negotiations to take place, and hopefully get that signed up treaty. Interest rates, significant increases, Rob already talked about it. Hopefully they start to come down over the following year. We've had the completion of Hassans Phase 1, over 350 units coming into the market for for government housing. I think this is quite key. We've got some preliminary figures from 2022 census, which shows that potential population has risen in the growth term set to 38,000. Official figures at the moment are around 32.5. So if this figure of 38 is confirmed through census, then it shows quite a significant increase, and that's going to obviously have an impact on development and demand for new accommodation.
I think that figure is a really important one about driving the development pipeline and the opportunity and population growth. I'm fortunate enough to work in Guernsey, Jersey, Isle of Man, what I would call our competing jurisdictions, and their population growth targets, especially the Isle of Man, they're looking to increase their population by 20 or 30,000 over the next decade. And imagine housing or what a development pipeline needs to look like to look after and cater for a 20 or 30,000 people population increase, which is pretty huge. And I think it's extremely ambitious. And I think everything in context, soon we're going to go through the development pipeline for Gibraltar, the amount of units that are coming on stream, and talk about some of the concerns that people in the room have about that pipeline and demand. But the population and workforce is a key driver to whether that's sustainable or not sustainable.
Yeah, and that's kind of identified in the table here. We've seen average earnings increase from 21 to 22. Employee jobs also increase. Job rate increased by 2.5%. We've seen an increase in frontier workers and visitor arrivals. So tourism is obviously a key contributor, and I think these figures are just post-COVID, so we've seen a dramatic increase over last year, and then it's obviously that contributes to expenditure. Quickly touching on some key valuation factors. It's important just to note that these figures are from our database, so these are our instructions that we've received, predominantly from banks and mortgage applications. So we've seen a significant decline in quarter one of all our volume, around 36%. That reduced to 18% in quarter two. But it certainly shows a decline in the number of transactions and volumes as well. Some of the key factors. I think sellers are now are having to adjust their expectations and be a little bit more realistic in the market. We're seeing price drops. Agents are advertising price reductions, which we've not really seen over the last 12-18 months. So this is key. Like I say, we've seen a little bit more realistic pricing, extended marketing periods, averaging now around 3 to 4 months. Property seems to be on the market for, whereas 12-18 months ago, you could be selling properties within a week, 2 weeks being on the market. Rob touched before on available cash buyers, and I think that's certainly key in GIB as well. The market's continue to perform, and that's a lot to do with cash buyers entering the market. In terms of values, as you can see from this graph, from when our data started in 2012, we've seen quite a steady increase in numbers, in values, roughly around 3 to 5% per annum. And then we had a spike after COVID, where there was a huge increase in demand. Prices rose quite sharply, around 7 to 10% per annum. And then this is when interest rates started to increase in quarter one, quarter 4 2022 and quarter 1 2023, where we're seeing kind of flattening of the market. And then the last quarter, our figures have shown that there's been a slight decline, roughly around 5.8%. Now this again is based on our figures and the information we have available. So although we will incorporate some cash buyers with the details that we receive from any internal sources, this figure is probably based on transactions and market applications. In the affordable housing sector, we're seeing slight growth, so we've gone up nearly 1%, so that's performing, that side of the market performing relatively well.
I think, so you understand, if there's such a dramatic decline in the volume of transactions and work, it paints a picture of a challenging market that is very similar to what other communities, other regions, jurisdictions and countries would be facing. At the same time, within the sector, especially within Gibraltar, the development pipeline and applications are so great that actually this year has been a strong year in terms of advisory, consultancy, development work, development appraisals, funds and institutions looking at their assets and reviewing and monitoring. So on one side, live transactional work has clearly declined by quite large amounts. At the same time, Gibraltar never stops and it keeps moving forward. So now we're going to head into really what today is all about, the future of development in Gibraltar, the development pipeline, and how we as professionals, collective professionals in the room, how we view the market, some of our concerns, whether we think it's sustainable or not sustainable, whether it's manageable, and how it's going to affect all of us doing our day-to-day jobs. What we've compiled together here is a list of the main schemes that have either gone for submission, outline planning, full planning, or going through either of those phases at the moment, and we've compiled a list of all of them and the amount of units from residential perspective of what is planned to be put into the marketplace. All of those numbers can change. Some of them have changed already. Some of them will be renegotiated. Some of the projects will be put on hold. Some of them might not start for 5 years, 10 years, 20 years. In Gibraltar, from experience, you never know. So I think what I can say is in the 20 years that I've been working here, I've never seen quite a pipeline like this one and quite so many schemes positively to look forward to. And to give a historical context for those of you that haven't done those 2 decades of development in Gibraltar, Gibraltar is very pragmatic and very sensible when it comes to development and putting product on stream. And I think it's really important to be aware of that. What normally happens is when there's sufficient demand, stuff comes on stream and goes to market. And when there isn't sufficient demand, it's held back. Now, that may sound really obvious to everyone in the room, but across the world, most markets don't really work like that. When something is ready, it goes on. When it's not ready, it doesn't. But in Gibraltar, historically, when there's sufficient demand, stock comes on stream. When there isn't, it slows down and is put on hold. So the developers or the main key players in the market within Gibraltar generally work out where we are in a cycle. And going back to what I was speaking with the Bank of England monetary advisors, one of the key things they said to me was, where are we in the cycle at the moment? And this is what we discussed. And I think this is quite an interesting one for the room today. So if we're talking about a cycle being a clock and 6 o'clock is at the bottom of the cycle, arguably today we're somewhere between 5 o'clock and 7 o'clock. I'm a very positive person, so I think we're at about 6:15. I think we've just gone past the bottom. But if you wanted to create a case for saying to me, no, Rob, actually Q1, Q2 2024 is going to be the bottom, so at the moment we're at 5:30, I also couldn't argue with you. But the key indicators say that we're bottoming out or just about bottomed. And then it's a question of how quickly do we get to 6:30, 7 o'clock, 8 o'clock? Because in cycles, 6 till 7 or 7 to 8 can take years. So I think it's really interesting in the context of a cycle, because development is key in cycles and it can't go too early, and it wants to come in as the market is rising as we reach 9, 10 o'clock in a cycle as things improving. So I think where you are in a cycle is key to development.
Yeah, sure. And what we've done, like Rob said, we've identified all the key developments that potentially going to come on street or commence in the coming years. We've identified the most likely schemes. So moving. So first of all, the schemes that are going to start development soon. We've got Bayside Central. Demolition's already started at the school, so that's well advanced. The scheme involves six buildings, focusing on mixed-use development with over 311 units, office accommodation, 11,000 square metres. Seems quite a lot, but hopefully once the treaty's signed, I think we're going to see quite an uplift in the commercial market. So potentially there'll be quite a significant demand for new office space, grade A office space. It's also going to comprise of retail accommodation, mainly at podium level. And like I say, demolition's already started, and a full plan application is pending. And once it is approved, construction will start immediately. The next scheme that's likely to take place is also Bayside. It's number 1 Bayside. Full plan application's been approved, and this will consist of 12-storey mainly residential building with 65 units. Also includes rooftop leisure amenities and ground floor commercial unit. The next one's right here in the corner of Midtown. Again, work started. This is going to complete Midtown, and it's going to make it all blend in harmoniously, and it's going to consist of 32 high-end residential units with residential parking, and that's started. The development's already started. Thought we'd also mention some government affordable housing schemes, which are quite key to Gibraltar, and obviously these are already received full planning. First one, Barclays Bank, situated on the old power station. It's going to create 482 residential homes, including 83 purpose-built flats for the elderly. Works have commenced, and then the process of clearing and removing the existing structures. Finally, we've got Chatham Mews. This is on the old West Side School. Planning again has been approved. It's going to construct 228 homes, and also again purpose-built accommodation for the elderly. They're going to vary in size from 1 to 4 bedrooms, and again construction's commenced and piling started.
Okay, so we're gonna move back to our beautiful pipeline. So the questions to the room. Hands up if you don't think that pipeline is a long enough pipeline and there should be more stock to come on stream. Anyone think not enough supply? No. So hands up who thinks that the pipeline is possibly too large and maybe more than Gibraltar can support, by a raise of hands. So, yeah, there are a few schemes not there, so it's not a complete scheme. Some are for political reasons, some are for no reasons. It's just a guide. Yes, there are other projects that are either being negotiated, discussed, or proceeding with that aren't on here, so it's not exhaustive. But broadly speaking, we're at a 4,000 unit pipeline for these schemes, and that's a really big number for Gibraltar, 4,000. And the reality is, depending on what happens in the economy, and depending on what happens with population numbers, depending on what happens with the border and the treaty, depending on what happens with interest rates and external and internal investment, we'll then see if this number can be consumed or not. Historically, to consume 4,000 units, and it could be higher with other schemes, so it could be 5,000 or 6,000 if you wanted to put in other projects for sure. But broadly speaking, at the 4,000 or 5,000 number, the question to the room is, can Gibraltar consume that? And it's a huge, huge number. And what does it mean for these projects? And what does it mean for the developers behind these projects? And how many years will it take for them to come into the market if we think this number is so great? And I think that's where we want the conversation to start. It's very basic economics, it's demand and supply. Clearly, everyone in the room believes that there's a large amount of supply, and maybe many of you are concerned that it's too much supply. And then the question is, the demand, where is it coming from? Who is paying for this? Who is funding this? Who's going to be living in these properties? And at moments like now, when there's so much uncertainty and so much volatility, both politically and economically, at this moment it can be maybe a big question mark. So that's where we want to start with the room, and that's where we want the last 15 minutes now to be a discussion and for people to give their views and opinions. So who would like to start the conversation and give their view on the pipeline and their thoughts? If you want to have a comment, sir. Sorry, I don't know your name. Patrick. Would you like to say something?
It's okay. Just wanted to look at that pipeline in general because I knew there was a couple of developers already spoken and fighting on that list. And I can't see Indigo in it either. Indigo holds.
Yeah. Yeah.
But let's do that.
So, what are your thoughts on the pipeline and where do you see it going?
Reasonable. I was roughly on about nearly 5,000 mark.
Yeah, 5,000. Yeah.
That's my sort of
Guesstimate. Yeah.
But the pricing as well. When you look at my background is in finance and banking throughout. So when I look at the average price as well, I think you're quite accurate on that.
Okay. Thank you. Other views on the pipeline? Any other comments and views? Because we want it to be a discussion. That's what today is about. You've got to raise your concerns if you think there's too much stock or how it's going to feed into market. Yes, sir.
I think the question that we've had in our estate agency, so many of the estate agents, is if too much will come on at any one particular time, meaning to say 4,000 or 5,000 units over 20 years might be realistic, but if 5 or 7 developments all complete at a similar time, then it doesn't seem realistic.
Yeah. I think that's a really key point, and it's every developer's nightmare. You don't want all the schemes to come on at the same time, and there clearly wouldn't be enough demand to take in a lot of that stock. Historically, again, as I said, developers have been very prudent in Gibraltar, phased developments, schemes slowly but surely coming on stream, where you know maybe 50% have already been sold off plan, and you know there's a reasonable demand. So I wouldn't be over concerned that all of that is going to come on even within the next 3 to 5 years. Generally, it doesn't work like that in Gibraltar, but we're going into a different generation, maybe generation now. Maybe everyone wants to build now, and everyone wants to see their returns and funding and profits and so on. So maybe there's more pressure on schemes coming on than historically, when the developments in Gibraltar would have been overseen by 3 or 4 main developers. They would have taken a more long-term view, and they would have phased their projects. And if phase A and phase B and phase C and phase D are phased over 20 years, and slowly but surely we bring them onto the market, that will be okay. Maybe some of these schemes won't be able to work that way. Hence, there could be the possibility of having a bit too much. And once you're in that position, that puts a pressure on pricing, because you can't achieve the pricing that you want when you've got too much demand on the market, unless things get sold at a lower price than expected, and that could be a problem for developers because it could affect their profit lines and margins. So I think it's a really good point. Other points on pipeline, development and concerns, please. Open discussion.
Have you got any data on the household size in Gibraltar? How many people occupy each home, and what's happening with that over the last 10 years, 15 years?
Yeah, data on size, and the size of the units, Rich, and how many people live in the unit and how that's changed.
I mean, there's been an appetite and a real push for smaller studio one-bedroom accommodation, especially down Devil's Tower Road area. I think a lot of developers now are shifting away from that product and moving more to 2, 3, 4 bedroom focused schemes. We've seen some schemes that have actually changed from the offering studio one bedroom accommodation to more larger family-based product. And I think that's certainly where the demand is now, as we're seeing, we're seeing a shortage of 2, 3 bedroom apartments, and certainly a large number of the studio one bedroom apartments being available in the market for both rent and sale.
Yeah, I think that was the biggest shift change.
It wasn't really the question though. The question was, is there any data on actual occupancy currently in Gibraltar and how that shifted over the last 10 years? If you don't have the data, it doesn't matter, but I'm just asking.
I think that demonstrates that, the larger family homes are more in demand, rather than the individual professional workers who have moved into Gibraltar. I think the family base is more secure from a development perspective.
So if we could prove with the data that the average home has gone from being 3 people to 2 people, it would justify a larger pipeline of properties, because less people are living in more properties.
And also how the
that
whole
makes
space
sense.
is changing.
Yeah.
Is it going to become sort of a dormitory sort of tax haven, or is it
Yeah.
going to become a sort of vibrant?
Listen, I think they're both brilliant questions, and they're both question marks as well. I always like to study the lights at night on the towers and walk around to get a feel of, that's always my concern. It has been for decades.
The
And
Stockholm plan doesn't really help you.
yeah, so
Just going from wholesale to retail.
exactly. So it's always my concern, and walking the streets at night generally do give you the answer to that. But moving forward, where that's going to be in 10 or 20 years, I don't know the answer. I think that COVID definitely saw a big change for developers, and so the multiple tiny studio units that were being built, that completely changed to larger units, outdoor space where possible, and so on. So that whole mindset and trend, that's going to be a generational thing now for the next 10, 20 years. People won't forget what that was like, and people won't want to be in that tiny studio with no natural light and outdoor space for quite a long period. So that will drive one thing. But I think the data on your point is a really good one. I'm sure we could throw something together. Yes, sir.
Sorry, my name is Keith Farrell from the Heritage Trust, the Gibraltar Heritage Trust. We look at it from a completely different angle, as you can imagine. We're interested in the quality of life issue regarding the place generally, how it's developing, the massing of buildings and the way that it can affect the local population negatively as well as positively. And one of the things that certainly bothers me and bothers many in the trust is the question of occupancy of housing. Certainly in the Channel Islands, I think, I'm not sure it's the island of Guernsey, there's again similar issues with occupancy where you have lots of lack of housing for the local inhabitants, particularly the poorer end of the scale, and lots of properties there just sitting empty because people have bought basically to speculate, to resell, and to use that as a form of investment. The transactional side of private property. And I think one thing that we are lacking here in Gibraltar is evidence of all the, it's useful to see some of the evidence you've been providing in terms of population increase and so on, but actually in terms of occupancy, both in the private sector, as well as even in the affordable housing sector. Because the affordable housing sector, you've seen a lot of young individuals, young people, in their late teens, being allowed to buy into the affordable sector, then, in anticipation of their need later on. But then finding that single young people have bought, they get together and they have a house, an extra house, which they then try to sell on, etc. So the justification for the volume of the public sector is not so much that it's questionable, but that it needs to be backed by the numbers, and the same in the private sector. Sorry,
Thank you, sir. No, very good point. I think to take a step back and be amazingly objective and independent, having worked again here for 20 years, the change in Gibraltar over that 20 years has just been incredible. And sometimes you've got to step outside and then come back in to see what you've all produced in Gibraltar over 2 decades is off the scale and unprecedented. And I don't see that being produced in Guernsey, Jersey, Isle of Man to the scale that's been produced here. And I'd say positively, especially for the social housing, it's second to none and as good as I've seen anywhere in the world. And it's something that Gibraltar should be incredibly proud of. And so where it's come from in 20 years to where it is today, incredible, and congratulations to everyone in the room that's made that happen. Moving forward, your concerns about the quality of living, if everything is being built and there's sufficient demand for it and it's being built for the right reasons, I think as a responsible stakeholder in Gibraltar, you have every right to have your concerns and ask those questions. And I think the government and everyone in the room has a responsibility to ensure that the next 20 years, the development that does take place is for the right reasons in the right way, and the current generation leave a great legacy for the future. So I think your concerns are fair and right. How that gets played out and what that looks like, I think, is a big responsibility is on the government and the developers to ensure that the heritage and quality of living remains. But again, I just want to repeat the point. What's been created here and produced in the development space and social housing specifically in 20 years is at another level on another planet and pretty unprecedented across anywhere where we work across Europe, and you should all be really proud of that. I fell in love with Gibraltar the day I walked across the border, and why I've been working here for 20 years. It's a very, very special place with very special people, and to ensure that continues for the next 100 years, we need responsible stakeholders to ensure continuity. I'm not sure how we're doing for time. How long have we got for more questions? We're doing well, 10 more minutes. Question? Someone put their hand up? No?
Yeah, I have a
Okay.
From the Chamber of Commerce. Given that according to the forecast,
about 4,000 units, give or take, to be built. And I think historically Gibraltar's had a rate of about between 350 to 500 units a year come on in the last 20 years. Even with a 20% increase in population, which we've had according to the recent census, although it hasn't been yet confirmed. Where do you think the demand is going to come? Is it going to come internally, or will it come principally externally?
Great question. Hopefully the answer to that is both. Gibraltar has to continue to innovate as a business economy. It has to attract external investment, and that's what it's done historically to be where it is today. So yesterday's banking, finance, insurance, gaming is tomorrow's Bitcoin, crypto, or wherever else Gibraltar goes, to be able to fill up that supply stream of those 400 to 500 properties a year for the next 10 years if this pipeline plays out. There has to be continued growth externally and internally. I'd very much hope that the trend of people wanting to be in Gibraltar continues, both from a local perspective. So I see that demand increasing because Gibraltar is a great place to live. It's safe. It gives a quality of life that maybe you don't get in your neighbouring countries. So I think for the internal perspective, I think it has a big attraction to remain in Gibraltar and continue putting your money and investment here. And externally, it has to continue to attract. And the way to do that is going to be to have a good deal, a good treaty. And I think that's slowed down, obviously, the last few years, tremendous uncertainty. I think there is a backlog of money that wants to come into Gibraltar, but will only come into Gibraltar on the back of elections here that have just taken place. The elections in Spain, a treaty, getting over inflation, interest rates, and then moving on. So, maybe 2024 is the breakthrough year that has taken from Brexit 16 to 24, 8 years of volatility and uncertainty, that maybe 2024 we get through a lot of that uncertainty and Gibraltar kicks on. So I'm positive, both externally and internally, that supply can be met over the next decade, but it requires Gibraltar to continue to sell itself and continue to innovate. I live my life outside of Gibraltar, selling Gibraltar to banks, funds, institutions, family offices, because I think it's a great place to do business, a great place to be, and has a great future. But it requires everyone in the government and all the stakeholders here to do that as well. This is a very small internal market, but the world is big, and Gibraltar Day is a great 3-day or Gibraltar Week event where we attract everyone from all over the world to come and see how great Gibraltar is. That has to happen at scale and probably 10 times greater than it's happening at the moment to continue the external funds coming in.